Hello and welcome to The Firm. On the show this week, are NSCL, its management and board and its promoter entity fit and proper for the exchange business? And BMW India wins an important transfer pricing case at the tribunal. An exchange default is no trifling matter. It's happened only twice in the history of India, and this probably is the third time. But the NSCL story is many times worse. Two defaults in this case: inaccurate and unreliable information provided to the regulator, an incompetent board, maybe even complicit. Aren't these reasons enough for the Department of Consumer Affairs and the Forward Markets Commission to take action against the National Spot Exchange, its management, board and promoter entity? Well, I put that question to FMC Chairman Ramesh Abhishek in this exclusive conversation. Let's rewind to 2007 when the NSCL was given conditional exemption from the FCRA to trade one-day forward contracts. In May 2011, violations by the NSCL were first noticed by the FSDC. February 2012, that's when the FMC was given supervisory power over all spot exchanges, including NSCL. In that very same month, the FMC asked NSCL to explain how 55 contracts on its platform have a settlement period of more than 11 days. It also highlighted instances of short selling by NSCL, which the exchange is not permitted to do. In April that year, the Department of Consumer Affairs issued a show cause notice to NSCL for the violation of exemption provisions. But it was only 1 year later, in July 2013, when the DCA barred NSCL from launching fresh contracts and ordered it to settle all existing contracts on due dates. The next month, the DCA also ordered NSCL to stop trading the E-Series contract. The question I put to Mr. Ramesh Abhishek was why the FMC or the government did not take action last year itself. Why did they wait for a whole year and more to stop the illegal trades on NSCL?
We asked NSCL then to give their explanation, and later on when we sent our report in April last year, as you have mentioned, the department asked them for a show cause. When they gave their second show cause, then it was sent to us for our comments. On 2nd August last year, we sent our comments to the department. And after that, as you mentioned, there has been an order on 12th July.
What took place between August and July, sir?
See, this matter was in the government, so it was under their examination and consideration.
But I'm sure that you must have been asking government why it hasn't taken any action on the report that you have submitted.
See, the exchange had another view on short selling and for trading in contracts beyond 11-day settlement period. So they had also given a counter view to department, and also in parallel the issue of regulation of spot exchanges was also being considered.
And yet no action was taken for a year. The reason why I ask you this is some information reports indicate that the turnover on this exchange pertaining to the contracts which are in violation was in the region of about 2,000 crores last year. And this year it has ballooned to 5,600 or 6,000 crores. So it's at least 3 times the amount. Had you taken action last year, or had you been empowered to take action, let me put it that way, as FMC, don't you think that you would have had a far smaller problem to deal with?
If it is a regulated exchange, then we have full powers and responsibility. But once an exchange is exempted from FCRA provisions, then we are not able to take action. And our power actually was confined to seeking information.
But the exemption was given based on certain conditions. When it came to your attention in February 2012 that those conditions were being violated, technically the exemption should automatically have lifted, and this exchange, which may not have been a recognized exchange, should have come under the purview of the FCRA. The FMC is the designated regulator under FCRA. Now, even if the FMC did not have the powers at that point to take any action against the exchange, surely the Department of Consumer Affairs and the government in all its might had the ability to tell this exchange that you have violated our conditions. Until we don't resolve this in a legal fashion, you are no longer allowed to trade these contracts. Shouldn't that decision have taken place last year? Wouldn't the problem have been a far smaller one if that had happened last year?
It's not proper for me to
would the problem, was it
was
correct, since you've gone into the history of what NSCL has been doing, that the amounts being traded last year were far smaller?
Yes, that's what we understand.
What is the end game now?
So far as settlement of by NSCL is concerned, as you know, we have been asked by the department to supervise it, and we are doing that for last couple of weeks. So far only 92 crores have been dispersed by the exchange, and so there is a huge amount still to be dispersed. The progress in payouts, pay-ins, etc. is not looking very good at the moment. Yesterday, NSCL had only 40 lakh rupees in their escrow account. So we'll have to wait and see how things go. But I mean, right now it doesn't look too good.
Clearly, this exchange has defaulted at least twice, if I may use the word broadly. What more does it need to do for FMC and the government to take action against the exchange, its management, the board of directors and the promoter company?
See, we are examining all these issues of their default and what action should be taken against them. As you know, we wrote to NSCL and board a few days back, reminding them that if they don't meet their settlement obligations, they may lose their fit and proper status.
They've already defaulted twice. How many more defaults do they need to make for the government and the FMC? And I keep saying both because I understand that the FMC has limited powers. For the government, specifically the Department of Consumer Affairs and FMC to take action. How many more defaults do we need to see before action will be taken against the exchange, the board, the promoter entity?
We are examining all the legal issues concerned, and we'll.
So what legal issues? You in your own letters have pointed out that they've defaulted twice. It's there in black and white.
See, the fact of default is there, that we have already pointed out in our correspondence.
Twice.
And what action we should be taking, that we are examining from the legal angle.
Despite two defaults, you have asked NSCL to appoint a forensic auditor. You have asked NSCL to appoint a firm to verify the commodity stocks in warehouses. That just seems to me like an area of serious conflict. You are now asking an entity alleged of having violated your conditions, of not having provided you with information, of having defaulted twice, to appoint its own forensic auditor and to appoint its own agency to verify its own stocks, which by its own admission is in shortfall.
See, so far as forensic audit is concerned, we have directed them to do so with the consent of the Commission. So any forensic auditor appointed by them will require our approval. So we are in the process of examining the proposals we have received.
Why don't you appoint a forensic auditor and ensure that that forensic auditor has the freedom to do its work and audit NSCL as required?
See, the forensic auditor appointed by NSCL with our approval will have full freedom. See, it is the NSCL that under its bylaws will be appointing them.
And the firm asked to verify the commodity stocks?
See, we have recommended to the government that services of entities like Central Warehousing Corporation or Food Corporation of India should be made available to us, so that the stocks can be audited.
I'm sure, sir, you understand, as does the Department of Consumer Affairs, that the longer we wait, the fewer stocks we are likely to find.
So we are going to, we have to get the services of such an agency, because CWC, FCI, etc., they are not working under us.
Let me bring up the other issue of conflict, and again, I'm not fully sure of the facts here, so please correct me if I'm wrong. But I understand that the IBMA, which has an over 1,000 crore exposure to NSCL, is an entity that is co-promoted by NSCL itself. And I think they also shared the presence of Mr. Anjani Sinha on their board. The NBHC, which is the National Bulk Handling Corporation, is the warehousing agency of NSCL. It is the agency that issued the warehouse receipts, the underlying stock of which is now in question. NBHC is also a group company of FTIL, I understand correctly. I'm sure you've looked at all these details. You don't see this as a huge area of conflict?
See, we are responsible for regulating the recognized exchanges.
Right.
What you are pointing out are very serious issues of conflict of interest, and definitely is a concern. But I mean, FMC is limited by its jurisdiction under FCRA. We cannot look into the conduct of entities which are not recognized and regulated by us.
The government of India can?
Well, that question needs to be looked into.
You have in your own letter raised doubts on the ability of the board of NSCL, which shares many members in common with the promoter entities and the other exchanges that they run, said that this board clearly doesn't seem to be competent to deal with the affairs of this exchange. You have in your own letter raised the issue of fit and proper, and yet you are not taking any action, even though you do have, in this one area at least, powers to take action against them, and if not against NSCL, the promoter entity and the other recognized stock exchange which it runs, which is the MCX.
See, the letter that you are reading makes it very clear that we have given a warning, and if matters don't improve and we don't see compliance, then we'll be taking action. I think our letter makes it very clear.
Your status as a fit and proper person is at serious risk and may lead to consequential actions. Non-settlement of outstanding trade on NSCL seriously reflects on your credibility and reputation, which is a key ingredient in meeting the criteria for fit and proper person. In the eventuality of you losing your status as a fit and proper person, you cannot continue to hold directorship or shareholding in any of the recognized futures commodity exchange, quote-unquote MCX.
So I
So
think
you have the power to revoke the license to MCX.
see, the license is given by the government, because but here the license of MCX is not in question.
So what is it that you can take? If you find the promoter entity of NSCL unfit and improper, if you find, let's give that benefit of doubt there.
See, if a entity is not fit and proper, then they will not be able to take shareholding or become director in any exchange which is recognized under the FCRA.
Right,
And we have already made our thoughts and views very clear in this letter that you are reading.
right.
And it has been only last 2-3 days that we wrote this letter, and we will be taking consequential action as we have mentioned in that letter.
So if this promoter entity, which is FTIL, is not found fit and proper to run NSCL, then by virtue of your powers, you can also ask them to leave their board positions and ownership position in MCX, which is a recognized stock exchange and falls fully within your jurisdiction.
See, it is given in the policy of national exchanges that any investor, any director has to be a fit and proper person. We have already mentioned in our letter that there are serious doubts and consequential action will be taken. So,
legally
yeah.
speaking, what do you need to see before you deem somebody unfit and improper?
See, thing is, we have not said that they are fit or unfit right now, but that view we have to take and we have to
So
proceed.
what will it need for you to take the view?
I think we are examining that. I told you. See, any action is taken, it has to be according to some process.
The other sort of the issue that I do want to focus on with you, and this is the last part of my interview, is to do with whether the FMC should be shifted from the Department of Consumer Affairs and the nodal ministry that it currently has run under and be moved to the Ministry of Finance.
Oh, I don't want to comment on that right now, but I think what has been waiting for a long time is amendment of the Forward Contract Regulation Act, and that would provide the necessary powers and staff and resources to FMC to discharge all its duties which have been given under FCRA for regulation.
How long has it been pending, sir?
I think it was mooted in 2006 for the first time.
2006.
Yeah.
What is your total staff strength? 50 people.
I think we have about 70 or 80 people. Yeah.
To monitor how many commodity exchanges, sir?
We have 22.
You monitor 22 commodity exchanges across this country, the geographical spread of this country, with 70 people.
Well, roughly.
And the funding comes from where, sir?
From the Government of India.
And since 2006, there is a draft bill
See the draft.
that seeks to give the FMC more powers, more funding, maybe autonomy, and the ability to beef up its resources to do a better job of regulation.
Well, that's it.
Mr. Abhishek, do you think that you would prefer to become a regulator under the Ministry of Finance?
I think I should not comment on that. Yeah.
That the other news report that's doing the rounds is that you might even in fact come under SEBI.
Actually, FSLRC, as you know, has recommended that there should be a unified regulator
Sure.
for 4 regulators, and it is under consideration of the government. So I think they will be looking at all the pros and cons.
So for another 6 years we may have no response.
I don't know. I mean, that is for the government to take a view on that. So, well, that process is on, I guess.
So you tell me that your term ends in July next year. Is it, sir?
Yeah.
Do you think by the time that you're finished with this office that this NSCL matter will have been resolved?
I have no idea.
Well, that was an excerpt of my conversation with Ramesh Abhishek, the chairman of FMC. You can watch the entire interview on thefirm.moneycontrol.com. With that, let's take a quick break on the firm. Coming up next, BMW India wins an important transfer pricing case at the tribunal.